History has a funny way of repeating itself, and nowhere is that more obvious than in the stock market. Investors, time and again, twist their reasoning to believe this time it's different. Legendary investors Sir John Templeton, who managed an astonishing 15% annual growth for nearly 4 decades, famously called those the 4 most expensive words in English. And he wasn't exaggerating, because blind optimism dressed up as genius is the fastest way to empty your brokerage account. Which brings us to Jesse Livermore, the original market speculator, the man who inspired the main character in Reminiscences of a Stock Operator, and the one who made fortunes by shorting markets during crashes. He once said, "There's nothing new in Wall Street. It's all happened before, and it will happen again." And he was right. Even today, there's a market bubble that doesn't get talked about, a bubble that eerily mirrors the conditions we see now. Not the dot-com bubble, not the 2008 crash, but one that most have never heard of, the Nifty 50 bubble of the early 1970s. Let's rewind to the late 1960s. Post-World War II America was riding a 20-year economic high. Factories were booming, suburbs popped up overnight. Americans felt unstoppable. Money was flowing, confidence was sky high, and optimism was, well, nearly blinding. And right in the middle of this euphoria was the stock market. From 1945 to 1970, the U.S. stock market surged over 350%. Investors, drunk on gains, started chasing what became known as one-decision stocks. The idea was simple: buy companies so dominant, so unstoppable that you'd never have to sell. These were the Nifty 50, blue-chip giants like Coca-Cola, McDonald's, American Express, and other household names. These stocks weren't speculative, they were supposed to be bulletproof. Sell? Crazy idea. But here's the catch. If it sounds foolproof, it usually isn't. By the early 70s, Nifty 50 stocks weren't just expensive, they were priced like gravity didn't exist on Wall Street. Coca-Cola, 46 times earnings. Xerox, 49 times. McDonald's, 86 times. Polaroid, 90 times. On average, 42 times earnings. Meanwhile, the overall market was a humble 15 PE, a number even your parents would approve of. And concentration risk? Massive. The top 5 Nifty 50 stocks made up 25% of the entire market, while all 50 stocks together accounted for 45% of the total U.S. market capitalization. Then, reality hit. 1973, 1974. Oil prices quadrupled, inflation soared past 11%, unemployment doubled. Nixon ended the gold standard. Result? The market plummeted 50%, marking the worst bear market since the Great Depression. And the Nifty 50? Bulletproof? Hardly. Coca-Cola fell 60%, McDonald's fell 70%, Polaroid collapsed over 90%. What seemed like eternal growth stocks became a financial nightmare. And recovery? Slow. The market took 8 years to crawl back to pre-bubble levels. Fast forward to today. Does any of this sound familiar? Mark Twain once said, "History doesn't repeat, but it rhymes." And the rhyme is clear. Enter the Magnificent Seven: Microsoft, Apple, Google, Amazon, Meta, Tesla, Nvidia. These 7 giants now make up 36% of the S&P 500, carrying the stock market on their backs. Just like the Nifty 50, investors are convinced these companies are untouchable, destined for endless growth. And their valuations? Off the charts. Google and Meta, 28 times earnings. Amazon, 35 times. Apple, 37 times. Microsoft, 38 times. Nvidia, 50 times. Tesla, 247 times. Sound familiar? Yes. Solid companies? Absolutely. Overpriced and concentrated risk? Also yes. The story hasn't changed. It's just in a new era with shinier tech. Investors tell themselves the same bedtime story. This time, it's different. History teaches us one thing. We never learn from history. Today's market may feel unstoppable, but remember the Nifty 50. even the strongest giants can collapse when the macro dominoes fall. So, if you're investing right now, take a moment, study history, ask hard questions. Don't get lulled into believing in the myth of invincibility, because the four most expensive words, they're still alive and well. This time, it's different.